Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's June 13th. This will be our chart listing for the day. And quick look at the daily chart. You can see kind of a mixed day. We had this huge sell-off, but once again, before the day's over, it rallies back, takes back the majority of it. We've been seeing this every day. It seems like it happens consistently, and we actually closed higher for the day than we did yesterday. So interesting day. You can see where we closed the previous day here with all that stem. We didn't make a new high, but we still closed higher than we did the previous day. So the price action continues to be interesting at the very least. So we continue to push higher here. We're starting to get some selling up here, these overbought levels. We're probably overdue for a correction, but we'll see what happens. So there's still room to push higher still here yet. So we'll just have to kind of wait and see what tomorrow brings. But there it is. We had a couple of news items today. We'll talk about that on the other chart. The only one you really need to worry about was the 730, the red one. So you need to be flat on that one. But let's flip over to that chart and take a look at it and go through the trades. And it is Thursday, so that wraps up our week. For anybody new, I don't do chart listens on Fridays. I try to get out of here by noon on Fridays and take a day off. So if you're new, you won't find one for Fridays. So anyway, let's flip over to that 2,000 tick chart and take a look at it. Okay, here's that chart. Real quickly before we get to this, I'm pretty sure Monday's rollover day, and lately NinjaTrader gives you a heads up on rollover day. So I'm pretty sure Monday's rollover day, but check that just to be sure. It's usually the Monday prior to the third Friday of the month or something crazy like that, which would be Monday, I believe. So I think 17th. Today's the 13th. So yeah, that kind of computes. I think the 17th is rollover day. So be prepared for that, and yeah, don't get caught off guard by that. Make sure you roll over. And you can see here we had the it looked like we might even have a range day early on like usual, but we broke through that support and we tested it a few times and finally worked a little lower. Finally got a break of this channel. We actually had two big legs up on this break. We ran to a new low and then it was straight up. Real steep, real strong. Not a lot of setups and entries. This market's tricky now. You got to be careful, because as bearish as this thing was, they reverse it on it. When they finally reverse it, it reverses on a dime, and it's just almost straight up. It's just so you got to be careful, because if you get short too late here, you can get burned, and you don't want to be trying to pick bottoms. So you got to watch that as well. So just be careful in this market. There's quite a few trades today, but you have to be really patient and just wait. And there's a lot of fake outs and they'll trick you, and there's a lot of sideways stuff. So just be real careful and don't get caught off guard. But let's zoom in here. If you start at 7, we've got a setup here. There's a first entry, second entry. It's mostly sideways. It is a second entry long with a great signal ball right off the key entry point. It's probably worth taking. I marked it green because there's not much room to the highs there. So you could get caught in this, but it is off a main key entry point, and that really confirmed it. And so a break higher will probably send prices higher, and of course it did. You just need to be out by 7:15, 7:20 at the latest, I would think, with a 7:30 announcement. And so then all this would be off limits. This looks like an overshoot to me. We still got a break and attempt to go higher, but just couldn't do it, and we ended up going sideways here, really. But early on, it looks like you're going to get a chance to go short right here on a triple test, but notice it doesn't break lower, so you pretty much have to skip that one on this bar. Then it it looks like maybe you get a chance to go high, and again, it doesn't break higher, so you just kind of sit tight. And then we actually get 2 legs up and a second entry short. And this actually breaks higher and fails and turns down. Gives you a big bearish bar. I like going short there on the breakout. And this runs it to the other side. It fails out the other side, comes back. But again, no setup to go long. Finds resistance again right at the previous resistant level. And you see we tested that twice. But notice also you draw that line across there, across those closes. And maybe there's a trend line there. You've at least got a couple of touches here. You'd probably want another touch like down here before it's confirmed. But I still like going short there. There's plenty of room to this low, but this thing just keeps going. Comes back again to the trend line. There is a hidden second entry in there, but we're still in this channel up. There's no reason to think this channel is over yet. And we've really only tried to come back and test that once here. I'd want to see it tested again before I felt comfortable going short yet. This does confirm that trend line. So if we keep going lower, then you'd probably trade the trend line. But you just have to be careful on this one. I think you need a lower high or something, and you don't get it here. So you get 2 legs down, then it corrects again. That's a second entry short there, but that's an inside bar. It's kind of in the middle of nowhere. We do get a double test there, but I think you need a triple test. And that doesn't come till here. And notice you got a leg back. It looks like 2 legs back, even though technically I would call this a new low. So that's 1 leg back, pull back, second leg back. So that's a second entry short there. But it's also a triple test. So you got multiple resistance levels right there. I like that one. Big bearish bar, plenty of room to the low, and once again it kind of takes off. But we do find support down here at the overnight lows. Move that back up. You can see that. And we're just kind of bouncing along. There's no real way to enter this. It does push lower, but there's just no way to enter that. We do get another couple of legs back. It's not technically a second entry, but on a larger picture, it's 2 legs back and a double test of this breakout here with a nice bar. I don't know that I'd go short below that one. You could, but I think I would wait on this one. And if you wanted to go short there, you could. If you assuming that's 2 legs back. It's a little aggressive. I did mark it green. You get a lower high here, but this is your signal bar, the green bar, so you can't really use that one. And then finally you get another second entry here, and but the signal bar is no good. If you'd had a good signal bar, I'd say, hey, you probably ought to take that trade. But you don't get a signal bar, and so you just got to watch it go without you. Then it comes back and you get another second entry here, but again the signal bar trips you up. You get this inside bar, and I'd say, okay, this has been a fairly bearish downtrend with that only being a tick difference. If it breaks below that, maybe you take that second entry, but guess what, it doesn't, and it gives you a doji and equal lows, and at that point I say you got to skip it. It's still tempting and it would have worked. You got to figure that you're getting some, the momentum is going to turn here, but you still just got a little buying coming in. But being that far away from the EMA, it's probably going to turn down soon, even if only to come back before it makes another leg up like it did. But there's just no entry there. And I tell you, it's really, really tempting to go long on that triple test. There's enough room back to the trend line. But this has been too good a strong downtrend, and you're likely to get another leg down if this is the first leg down. We don't quite have a new low. So as much as, I had to bite my tongue not to go long there, and it would have been a great entry. But it's very risky, and it's not following the rules. There's no real reason to be going long yet. So if you did go long there, pat yourself on the back, but know deep down that you probably got lucky. The odds are it's, you probably get a scalp out of that, but it's just not worth the risk. Look at that downtrend. It's not worth. And this is real choppy sideways stuff, so you could get all chopped to pieces, even if it is going higher. So just try to avoid that stuff. Like I said, I wanted to go along there so in the worst way, but I avoided it. And of course, we run up here, we get a break outside, a couple of legs up, then we make a lower high with a nice signal bar. The problem is it's a little congested, but we're in a downtrend, and you're going to get it on a trend like that. You're going to get a retest. So it's all about timing. And so with a triple test and it being a lower high, maybe you take that one, but at the same time, because it's congested, maybe you sit tight. But when it tries to go higher again and fails and gives you that bearish bar, if it breaks below that one, it's going. And you can see, boom, off it goes. That was a really nice entry right there. You get a hidden second entry here. Again, you might argue for that to be green, but I think you have to wait on the lower high, which comes here, and look how bearish that bar. It actually breaks out of this little congestion area. You're probably going to get what you're probably going to see. You might measure from here first. You're probably going to see two measured legs down. Well, there's the first one. Then I would measure from here too, and you can see we got a little bit more than that, but that was basically your break with two legs down, and then usually it's going to reverse, or at least you're going to get a correction. It might be sideways for a while, but you're going to get, you're going to get some kind of correction there. So yes, I like that short. There's a lower high here, but I think you moved a little too far. It's right off the key entry point, very bearish bar. If it would have broke higher here and turned down again, you probably could have gone short on the engulfing bar, but this closes way too close to that low. It ends up working, but once again, it's just not a sure thing because we've already got the break at a new low in place, and so you got to be careful here. And of course, it does eventually reverse here. No chance to really get in any of that. And then watch what happens. It comes back here, tries to go higher, pulls back again. And you probably should have already had your trend line off those first couple of bars there. And it's like a little double bottom matching there. And so this is a second entry long. If it breaks above that, you're probably going to at least get a scalp. And it may take off and go higher. You're probably looking at a minimum. Even if this is not the bottom yet, you're probably looking at a minimum of two legs up. So you've got a little ways to go here. And then it runs up, pulls back once, first entry, pulls back again. So when it breaks above that, it's a second entry, but it's also a new low here. So first entry, second entry. So it's a failed second entry short, which is like a continuation pattern. It's probably going to give you the other half of this move to make an equal move. Like so. And off it goes. It's a little risky. That's the reason I made it green, but it's something to think about. And then we're just kind of chopping higher here, and then finally we get a trend back. There's no, that's a first entry, and there's no break of this. But then you get this higher low and a second entry long right there. I like that one. It gets exactly, I think it gets one tick. You had one tick to spare there. I think it got 7 ticks, and of course it takes 6 ticks to get your 4. If it has to tick through your exit limit order. But still is a winner. Then it comes back and gives you another second entry here, but the signal bar is no good. And people ask me, can I move on to this bar? No, don't do that. In some cases you see it's a great trade, but you'll get burned in a lot of cases too. So just be real careful with that. I think you're better off to skip the trade than to take that. There's another new high here, first entry, second entry, but again it's an inside bar, and you can see we're just going sideways, so you can't really enter in any of that right there. There's a little breakout pullback, but again, no setup. And it just keeps running higher, and you made your new high. And then you start working down. If you got a good setup here to go short, maybe you take it, but you don't get it. And then you get this, you get a break. It tries to make a new high, breaks higher and fails and turns down. If it breaks below that, it's probably going to make a new low, even if it's going to go higher still. And it ends up just kind of chopping sideways. But that turns out to be a nice trade right before the 230, for the 230 break, which is pretty much our stopping point. Now, if you're managing a runner into 230, and there's nothing wrong with holding on to that for a little bit longer, I'd be out by 3 before the craziness usually starts right around 3. Lately, there hadn't been enough volume to be much craziness, and they drive it higher. So, you know, you need to know when your broker's going to start kicking you out automatically. Some of them still do around 3, I believe. Even though technically the next trading day doesn't start till 5 o'clock. So, but just ask your broker. Make sure you know when your broker's going to kick you out. Most people still exit by 3 o'clock. I like 2:30. And the main reason for that is you see there's not a lot of price action after 2:30. Some days there'll be more than that, but there's not a lot of price action. And if you have a loss right here at 2:30, you don't have time to make it back. But now if you're over here anytime before 1 o'clock and you have a loss, and that's your only trade of the day, or let's say that's your second loss, you probably should quit if that's your second loss. But you don't have time to make it back if it happens at 2:30 here. You know, 2:15, 2:20, and definitely after 2:30, you don't have time to make it back. You can see there's not even enough movement, or there's no setup to even get a chance to make it back. So you just have to be real careful. Don't take new trades. Again, there's nothing wrong with managing a trade that you got in out here into 2:30. Doesn't mean you got to exit that, especially if it's moving in your direction. Just let it keep going. Even if your broker's going to kick you out, if it's going in your favor, it's still making you money. So don't worry about it so much then. But if it does, don't take any new trades after 2:30. Hope that's clear. And definitely exit before if your broker doesn't kick you out, which most of them do if you're on day trading margin. But if your broker lets you carry overnight trades, just be sure you exit before 4 o'clock. Otherwise, you're going to have to carry that trade through the close, and you don't want to do that. I mean, I can show you where, you know, the trade, one day it closes here, and sometimes it doesn't open till way up here. It doesn't happen all the time, or it closes here and doesn't open till way down here. You know, you can't control what happens between that witching hour of 4 and 5 o'clock, and that's why they let you. That's why they require full margin if you carry through the overnight. But if you don't carry through the overnight, they'll let you trade with what they call day trader margin. And that's the reason. Most of you probably understand that. That shouldn't be, if you're trading, there shouldn't be any news to you. But just in case, you'd be surprised some people don't understand that. But anyway, there it is. The one good thing is we're getting movement, we're getting trends, we're getting pull 2 legs back to the key entry point. Not as many as we'd like, but we're still getting them. So we're getting chances to enter and make money and have good setups. There's just not enough of them considering the amount of movement we're getting, in my opinion. But still, we're getting opportunities. So you got to be patient. You got to sit and wait. And if you have trouble with that, just close up for the day. You know, if you're having to sit, I mean, really from a little after 9 until almost 11 o'clock, you didn't have a decent trade. There's a couple of greens, and you could probably argue there's a couple more greens in there. You know, they're always arguable. But we want to stick to the sure things. We don't want to risk our money on a maybe trade. We always want it to be a sure thing for the most part. So stick to the rules. Be patient. Be choosy. You know, one time I believe that you didn't want to really be choosy, and I know there's other traders that say that too, that, you know, you can't pick and choose. But I've I've come to find out that's not true. As I've gotten more experience and more trading, and my trading's improved, by all means, pick it, be choosy. Pick and choose. Wait for the sure things, because there's some sure. You can almost feel them when they're sure things. Now, I've had newbies send me something and say, I swear I thought this was a sure thing and it was an instant loser. Well, that's just because you don't have enough experience. You're not a very good chart reader yet. Yeah, you understand the strategy, but you just don't have the experience in the chart time yet, and that's going to happen to you. But once you've are a skilled chart reader and you've been making money for a while, you'll pretty much 99% know when it's a sure thing. Trust me on that. And doesn't mean you still can't get tripped up. Things happen, but for the most part, you'll know when it's a sure thing, and you'll be right 90% of the time. You're never going to get to 100. You might get to 100 for a while, but eventually you'll slip up. So it's almost impossible to be 100. I mean, losses are part of what we do, so you can't let a loss shake you up. You just can't have a bunch of them in a row. That's the key. And if you follow the rules and you're choosy and you're wait on the sure things, you won't have. It'll be rare if you're good at this that you'll have multiple trades in a row, losses in a row. It'll be rare. You probably will only have a loss every 8 or 10 trades. And that's where you want to get to be to make the real money. I mean, we're only trying to get 4 ticks. People always want to change the rules. People have had it beaten in their heads about risk reward. And if you're a loser, yes, you have to have risk reward. But when you can get to 90%, I found that by trying to have risk reward, I just lower my win percentage. I'd rather stay at 80 or 90% and rarely lose than try to put some risk reward in there that causes me more losses. Trust me when I tell you this, we've got this down to a science. You got to be able to pull it off. But if you are a losing trader and you're not making money, then yeah, you need risk reward, because all gamblers do. If you don't have risk reward, you lose your gambling money. But I'm telling you, you can get good enough at this that risk reward will actually lower your win percentage, because you're only trying to get 4 ticks. If you can time it and figure out the price action and you know where to enter, it's so much easier to get 4 ticks before it goes 8 or 10 ticks against you. So by adding some risk reward in there, you're just, instead of having to get that measly 4 ticks, then you got to get 8 ticks or 12 ticks or whatever you're shooting for. And then the odds start to work against you. I mean, look at this chart and how easy it would be to get 4 ticks if you're just entering with the trend, period. Even if you weren't following the rules and you're just entering at the trend line with the trend, look how easy it is to get 4 ticks most of the time. It's almost a sure thing. Trust me when I tell you this, risk reward is not as important as people make it out. But everywhere you go, they'll talk about it, because their strategies are losing strategies and they're losers. So if they don't have risk reward, they go broke. They still go broke. It just takes them longer. That's the problem. In the end, they all go broke. But because they're using risk reward, they last longer. But in the end, it's a losing strategy and they lose. They just prolong the agony. If you learn to read this chart and you follow the rules and you're patient and you stick to the sure things, you don't need risk reward. Obviously, you don't want to shoot for 4 ticks and have a 10-point stop. No. The stop always goes above or below the signal bar you're entering on. And most of the time, even lately, you can still get back to the old 8-tick rule. Not 100%, but many times you can get back to the 8-tick rule that we used to use. We had to throw that out for a while because the market just got so volatile that there's no such thing as 8 or 10-tick bar. But the strategy still worked exactly the same. It just made it easier to get the 4 ticks, and you had to go further to get stopped out. So if you're reading it right, the odds were just multiplied in your advantage. COVID was the greatest money-making period of all times in this market. It was unbelievable. Because of that, I don't even have to come in at 7 o'clock and trade unless I want to. Because COVID was like a automated ATM. I mean, you'd get these huge moves that just would go, and the bars were so big, and it was, if you followed the rules and you were picky, you could be done in a couple of trades easy with runners. But COVID is gone, and we're back to more of a choppy, tough market. So it feels a lot harder now than it did during COVID, because it is harder, because you don't get those crazy moves. You still get some crazy moves, but they're not constantly. And the volume's not as high as it was back then. But anyway, I didn't mean to get off on this tangent. But I just felt it was time to mention that again about risk reward. Don't worry so much with that. And the way and don't believe me, prove it to yourself by sim trading. Get on the sim trader and just try it. Just follow the rules and try it, and eventually you'll see if you get there. But don't take my word for it. Prove it. Never believe anything anybody tells you. Prove it. And you don't have to wonder if they're honest or telling you the truth. Just prove it to yourself. Do it. Prove it out. Either you will or you won't. So, but you don't need risk reward. We'll try to get 4 ticks. You follow the rules the way we set it up. Your safety stop goes 1 tick above or below the signal bar, depending on the entry you're going, and you scalp for 4 ticks. And if you want to get more, you add runners. You don't try to go for more ticks. You still get your scalp. Make sure you're going to make some money, and then when you catch those really good ones, those runners pay off, and then they make up for they usually double, triple, quadruple your losers. So it's like not having any losers, because those runners will race them all, and that's when your bottom line will really take off. Now it takes a while to get there, because it's like I said, you can learn this strategy maybe even in 6 months, but it doesn't mean you can trade it profitably, because you don't have the screen time and the experience, and you will get tricked and misread things. But eventually, the more you do this, the more experience you get, the better you'll get at knowing what prices are going to do every day, because you see it over and over and over. I've got thousands and thousands and thousands of hours sitting here doing this all day long. And it's going to take most of you, a long time to get to that skill level, to get that kind of experience. But you got to start somewhere. But for now, do it on the simulator and save your trading capital for when you really need it, which is when you learn to do it and you have the necessary experience in chart time. So anyway, I'm going to wrap it up. We're getting towards 30 minutes. Hope y'all have a great weekend. We'll be back Monday. Don't forget about rollover. Watch for rollover on Monday. I'm pretty sure it's Monday. Verify that. I think NT will warn us ahead of time. I think it's been doing that lately. I think they've worked that in there for us. So anyway, and sometimes the first Monday is not really the rollover day, even though it says rollover. Just open both. What I do is open both charts, and I'd still trade the one that has the most volume. And you might even switch somewhere in the morning. The original contract may still have more volume than the new contract, but by midday it might flip-flop. So just keep them both open, watch them, trade the one that has the most volume. If they're equal, it doesn't really matter. You're trading the same thing. So that's how I do it anyway. So if you want to, don't switch until the volume switches. It used to, sometimes it would take a couple of days. But nowadays, it seems that the volume switches before the day's over. So anyway, there it is. I'm going to wrap it up. We'll be back Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.